And welcome. It's Mary Ellen McGonagle here with your Friday afternoon MEM Edge show. And this is the show where we bring you where the action is in the broader markets. A lot of activity beneath the surface as usual here. This week, as always, we're going to begin by taking a look at the broader markets. And thankfully, you guys did put in questions at the end of last week's show. I really appreciate it. One of them was a request for a more defined or advanced view of the broader markets. So we will get into that. Also, take a look at some of those headline news that drove price action last week. Quite a bit in the way of news, talking about how that may or may not have impacted some sector rotation that's continuing to shape up. And then also, we're going to take a look at some of these earnings releases and how that has impacted. That, I would say, has been the primary driver of stocks that have had the biggest moves, both to the upside and the downside. We're also going to take a look at small cap stocks because they experienced the most by way of a recovery from Wednesday to Friday. And I'll share with you where that recovery took place. So let's go ahead and take a look at some of those headline news. Last week, we did get word that consumer confidence dropped to a 9-month low. That's all about high inflation. Consumers are feeling the pinch, and that did come out earlier in the week. And this is what the Federal Reserve wants. They want reduced spending. They want to see the economy slow down. We did get durable goods orders also earlier in the week, and that also showed a slowing down by way of business investments. First quarter GDP information just came out last week. They generally will come out with a number and then revise that 2 to 3 times beyond. But that first GDP print for this first quarter also showed that the economy is slowing. We did get core personal consumption expenses for March, and that's that PCE, highly relevant inflationary number that the Federal Reserve is wanting to get lowered so that it will in fact point to inflation that is potentially going lower. The number did not show a lot in the way of a drop. It declined, but very nominally. That core number that the Fed takes a close look at, it excludes energy and food, is still elevated. It's being termed sticky. So that PCE number mixed, but at the end of the day, it's still quite high. Now, next week is going to be really quite important, certainly by way of economic and investors' thoughts on what may take place next week. It's all about the Federal Reserve's meeting, their FOMC meeting on Wednesday. We will hear the Fed's decision on their interest rate hike, and then also Fed Chair Powell's speech afterward. We will be on the lookout to hear about any potential future monetary policy shifts. Many investors are hoping that this May quarter point expected rate hike will be the last one, but that is highly relevant next week. Also, we will get employment data for April, another key metric in all of this inflation interest rate mix. That's due out next week as well. So let's go ahead and get started. We're going to take a look here at the broader markets. And here we are with the S&P 500. This is a daily price chart. As mentioned, we're going to dig in a little deeper than we normally do. The S&P ended the week up a little more than 0.5% for the week. And what that did here, because we did start the week down quite a bit, and I didn't mention it, but it does bear mentioning the fact that these mega cap FANG stocks, several of them came out with very robust numbers, Microsoft, Amazon, Meta platform among them, and they did incur a nice late week rally and lots of constructive price action shaping up beyond that, because we did close the week back above this 10-day simple moving average, the RSI above 50, trending higher. And let's go ahead and take a look here at the stochastics. This is a faster moving momentum indicator, and it too has turned positive. So net, last week's downtrend has been reversed. We regained the uptrend with a move back above the moving average and positive momentum indicators. Now, from here, we are going to dig a little bit deeper and we can take a look at this particular dashed line. It's at that 4,200, and this level is really critical in the sense that it is upside resistance. And you can see that we rallied into that 4,200 level back here in February after that nice January rally. And since then, we've been unable to break above that. We did have a brief break up here during that July rally. Investors, many are thinking third time may be the charm, but we do want to get back above that 4,200 level and retain a presence above that. That's going to be certainly near term very instrumental in guiding investors' confidence in this market. Now, from here, I'm going to share with you a weekly price chart of the S&P. And when you're looking at these longer term time frame charts, they are going to help shape your longer term outlook. Weekly charts for intermediate term outlook, and we can see that by and large, your momentum is in positive territory with this RSI. Your MACD is in positive territory. Now, I don't have it here, but the stochastics are as well. So we have positive momentum on that intermediate term, and the index is above this 10-week or 50-day moving average. So your weekly view is constructive. It's not powerfully trending upward, but we do have that uptrend. So the intermediate term outlook is looking constructive. From here, I will share with you an even longer view. This is a monthly chart of the S&P 500. And what I do want to highlight here is the position of this RSI and the stochastics. Now they are both, the RSI did dip into positive territory here. The S&P has moved above this 6-month moving average, and the stochastics are right on the cusp of turning positive. Let's take a look at the relevance of that possibility. If we can get these momentum indicators in tandem up there in positive territory, I'm going to take us back to coming out of that 2000 to 03 bear market. Take a look at the dynamics here, the stochastics entering positive territory simultaneously with that RSI, and it did precede a very healthy rally, multi-year. Coming out of that 08 huge bear market period, take a look again, stochastics, positive territory, likewise with that RSI trending upwards. So we are very close to having that occur. However, from my work, I will need to see additional characteristics in the market taking place. We do still have very narrow leadership. I'll share that view with you in just a minute. But of note, if we can get a push, we could in fact be on our way. Those that subscribe to my MEM Edge report, I'm going to get more into that this weekend as it relates to other characteristics that need to be present in order to give true confidence to a longer term uptrend. But it certainly is encouraging. From here, let's take a quick look at the S&P equal weighted index here. So this is the S&P 500 equal weighted. And I did want to share with you the view that the equal weighted essentially is going to be not including, or they will be included, certainly those mega cap FANG names, but they won't have that heavy weighting that they have in the general S&P 500. So this equal weighted view of the S&P is not as healthy. This week, we did move back above these moving averages, 10, 50-day moving average. But the difference is these moving averages are still trending downward. It's not as healthy of a view. Your stochastics are not quite positive. RSI is. I will say it is encouraging because this late week rally did include a number of other areas outside of and also including those mega cap FANG stocks. So it is encouraging, but ideally I'm going to go ahead and pull up a monthly chart of the equal weighted S&P 500. And you can see when we're coming out of a bear market, that 08 into 09, the healthy stance of this equal weighted, and then also likewise coming out of the more recent 2020 bear market, and take a look at where we are now. Rather myopic. We aren't getting that real strength to get, again, be encouraged. So that is the deep dive that I talked about in the question. And please, I encourage you to Put questions down below, anything else that you'd like to see covered, and I'd be more than happy to do so. So from here, let's go ahead and move on. As always, we want to take a look beneath the broader markets at those 11 sectors. This is a 2-month daily price chart view, and it is sorted by this RSI. So it is strength to weakness. And then also, it's not going to be pure strength as it relates to the performance of these underlying. Actually, this is not the sectors, but we will be pivoting over to that other view in just a minute. Here we are with the 11 sectors, much different view here. But again, strength to weakness as it relates to the relative performance. It's not pure performance driven. And take a look, Staples still up here in the forefront. This particular group has just been on fire, not just defensive, but it's these companies, particularly Procter & Gamble and many of these other heavier weighted. I'll share with you some of the names from this week that are having huge moves, and it's all about growth. They are able to contain and retain their growth in the face of inflation by raising prices, and loyalty among consumers is keeping those stocks higher. Let's take a look. XLC popped up here to the front here. This is a huge gap up and move higher. And this is all about Meta platforms and also Google are both a top holding here, but it is much more this week all about Meta. Up 12% for the week, did boost the group, and we can see positive momentum shifts there. There were a number of other areas, if we can get to it, in the communication services that are on the move. Comcast, I'll just give a hint, was one of the reasons. So from here, we can see the S&P. Let's take a look. Technology was the second best performer. It was up 1.7% relative to a 0.7 on the S&P 500. Nice round out here, poised for a base breakout, positive momentum. This is going to have a lot to do with Apple and certainly Microsoft, up 7%, really helped boost this group. As we move forward, I'm going to share with you some other areas in tech that are beginning to bubble up here in light of earnings. So let's go ahead and take a look at some of these other areas that are of note. Healthcare up here, XLV. Now, the overall group did underperform for the week, but we were able to retain positive momentum here. In our next segment, I'll share with you where that relative strength is emanating from in healthcare. From my work at this point, I am favoring healthcare because it does have that defensive nature if we were to enter into a recession, but also growth names in healthcare that are really quite interesting at this time. XLY, consumer discretionary, up a little more than flat. We can see it's retaining its upside presence here. This is all about Amazon. Actually, Amazon was down 1% and Tesla was down 0.7. So I'm going to take that back as it relates. I do know that Amazon did come out with strong numbers, but for the week, they were both flat. So there were other areas within retail that were quite vibrant. Most notably, housing continues to be up there. And we're going to take a look at some of those names in that discretionary area. So, industrials are down here in this lower quartile. They were down 0.7%, but note this 2-day rally here. And I will tell you, there is vibrancy that is shaping up within the industrial space, all about earnings. And I will share with you what the driver there in those industrial stocks are as well. Now, from here, let's see, I did want to, from here, take a look at the components in the Dow Jones Industrial Average. Now, I don't mention this index that much, but I will tell you that this month, certainly for the month of April, which is ending May 1st on Monday, the Dow was the top performer. It was up 2.3 relative to the S&P, up 1.2, and the NASDAQ was down about 0.2%. So from here, I do want to share with you a view of those stocks in the Dow so that you're aware of those relative outperformers that are starting to really perk up here. As you know, the Dow Jones Industrial Average is no longer mainly industrial related. You're going to get a nice wide view of the current economy with this index. So what I've done is added that relative strength indicator and then also sorted the list by strength so that you can easily see where that relative outperformance is. And McDonald's subscribers to my MEM Edge report will be very aware we put this stock on upon its base breakout in late March. Continuing into an uptrend, the company posted superior earnings this week. They are really hitting the nail on the head with their social media and their loyalty programs and so on. Huge growth numbers for such a big company, remaining in a nice uptrend. Talked about Procter & Gamble in response to strong earnings. This was last week. Gap up and a nice really back and fill formation beyond that gap up. So that is that move into illustrating the move into staples. Coca-Cola up here, also a staple stock, and we can see the very nice uptrend there. Microsoft, they did, of course, add Microsoft several years ago to the Dow, and take a look. Here is that gap up that reversed the downtrend. Nice MACD crossover, really solidifying the fact that Microsoft is in a nice uptrend. This is also on my MEM Edge suggested holdings list. We'll be digging in, reviewing that name. Apple is also on our list, and so is Merck. We can see Merck here did report earnings this week, but they were mixed. Your momentum does still remain positive, however. And interestingly, because I'm just uncovering this now myself, we also have Walmart, and my list is not that large. I will tell you, the suggested holdings list is about 12, maybe 13 names, but that is a view there of those relative outperformers there. Let's go ahead and take a look. This is going to be earnings related. HON, Honeywell, nice downtrend reversal, came out with strong numbers, positive momentum. I keep saying I'm not going to go through each name, but I do want to point out areas and names that are of interest here. TRV, Travelers, we're seeing vibrancy in the insurance space. Could be because COVID, we are distancing ourselves from the worst of that. Travelers, of course, is a different type of insurance company, but gap up on earnings and a nice potential base formation coming out of that. One other name that I did want to share with you is one of the better looking software stocks. This is Salesforce CRM, nice double bottom formation. Stock is poised to break out of a base. And then as we move forward, of course, Intel came out with earnings today, gap up into positive momentum there. We didn't quite get this shift with that black line up through the red just yet, but that was a nice boost, certainly for semiconductor stocks. And then as we drilled down, I did want to share with you, Caterpillar came out with really good numbers, but the market just is not interested. We can see the stock is languishing despite that report. So your weaker areas down in this lower quartile. Now, in going through that, I realized that I may not have shared with you this a view of those ETFs that are really quite helpful in getting your arms around possible movement among the sectors, and then here with these industry groups. So again, that 2-month daily price chart view and RSI. If you think back, I did talk about healthcare being in a nice uptrend, and this is one of the primary reasons. This is IHI, medical devices stocks. And again, this is an area where these medical devices are needed, so it is defensive, but also it does have that growth component. So that is of note there. Also from here, we can take a quick look at the next area that's showing strength, and that is gold, but it's all relative here. Gold stocks were flat for the week, but they're holding in here with positive momentum. And I also do want to share with you within technology, also all of these areas I am seeing being very heavily impacted naturally by earnings. So here we are with the view of software. You can see a pullback this week. There are definite areas within software that are faring well. We looked at Salesforce, but overall the group is coming under a little bit of distribution. It's going to have more work to do to turn positive again overall. And then one other area I mentioned to you were semiconductors that have been in quite a downtrending phase, but I talked about Intel. There were other companies that reported this week, and the group is trying to turn. We definitely are not there yet. However, NVIDIA from my list is the one name that is continuing to hold up really quite well. So that's that view. We looked at the Dow. From here, I do want to mention and share with you some of those small cap stocks, because We'll first begin by taking a look at the Russell 2000 small cap index to give you a view of that reversal. We're not out of the woods yet. This overall group is not healthy. We are not in an uptrend similar to this January and then that July period. So a lot of this deterioration here is due to the fact that the Russell 2000 does have a number of these small bank stocks in there that are getting hit. Now, this rally over the past 2 days is not bank related. There are a number of names, and I did want to start because I talked about home builders, and we can take a look at names last week. For instance, DHI had that gap up in response to strong earnings. DR Horton, one of the bigger home builders, and it is acting super nice beyond that as it relates to pulling back just to this 5 to 10 day simple moving average and retaining its nice uptrend. From here, I was going to share with you some of these smaller, and you can see when you get it right with these small cap stocks, you can really have true outperformance. But they do go, the knife falls both ways on the downside as well. But here's Taylor Morrison Home, a small cap home builder, earnings driven, base breakout, big volume, nice continuation rally. We can also take a look at another small cap home builder, BZH. This is Beazer Homes, and this is an outsized 24% move, and another base breakout on a gap up. So from here, it will be interesting to see, because certainly we've seen these huge 24% moves. In fact, let's go back and just for historical precedent. Of course, this is going to be a much bigger stock, but this is Meta, and they did have a 22+% gap up here at this time, and I did write about it because that kind of a move does not happen often in mega cap names. And the stock in this case pulled right back to this 21-day simple moving average, entered into an uptrend, and then yesterday we did experience another nice gap up. So you will want to use historical precedents as your guide. So let's take a look at some of these other small cap names, and it is going to be relevant to bigger names as well. So again, we did see, for instance, home builders on the move, lots of good dynamics there, supply versus demand, interest rates still relatively low. So as that, we are seeing add-on industry groups that are faring well. This is SSD, Simpson Manufacturing, and they do a lot in the way of building and construction. And we can see they came out with earnings this week. This is a small cap name, gap up into a nice uptrend. Another building related stock, FIX, small cap, also coming out with big earnings. This move here at the end of February was also earnings related. So we could easily see further upside with that stock. And then last up on that small cap space, this is Emcor, entering into a nice base breakout, heavy volume. But what's interested me here is the fact that we had that MACD just entering into positive territory. So quite constructive there. With StockCharts.com, you can always pull up this full quote view. What that will do is provide you with the industry group. This is a heavy construction name. And then if they offer a yield, the market cap, 8.2 billion, and so on, that can be really quite helpful. From here, I do want to share with you some of the names that are due to report earnings next week. It's going to be really quite interesting. So what we can see from here are some names that have been on the move. We're seeing these rallies into earnings. This is Shopify, not overly interesting in here, but I do think that that will be closely watched as a proxy for potential retail, certainly online retailer. Auto stocks have been suffering a bit, but here's a name that has been really on the run. This is RACE, Ferrari, and we can see this nice uptrend. I do recall covering this stock. We can pull up the weekly just as we were really in the beginning throes of COVID back here, and the company had an unusually large number of orders that you do need to pay 200,000 plus in advance. and then it takes time for your particular vehicle to be delivered. But it was very, I guess, people in lockdown daydreaming about their potential Ferraris. The company is going into the EV space very exuberantly as well, but we can see that the stock is in a nice uptrend due to report earnings and another auto stock, because these certainly Ford would be closely watched. This is also due to report earnings. We cannot forget heavyweight stock Apple, and that's going to be the last of those mega cap FANG stocks that are due to report earnings. It will be closely watched. The stock is in a very nice uptrend, and analysts are revising their estimates higher going into the earnings report. Another name that's going to be very closely watched, it is during earnings season, is MCHP. This is microchip technology. It is a semiconductor stock, and you can see how deteriorated this price action has become over this near term. It did not really participate as much as other names in semiconductors in the rally phase. So it will be of note or of interest, certainly to me, because the stock is not trading at all-time highs going into numbers. Instead, it is down and out. So we could see a potential nice rally there, depending on results. Another semiconductor name, Advanced Micro, looking very interesting going into their earnings, because the RSI is just now poised to get into positive territory. This MACD just now poised to have a nice crossover as the stock begins moving above these moving averages. This name is definitely on my watch list. And then last up here, relative to earnings next week, is Berkshire Hathaway, and that is another closely watched name. Let's see if we can pull this up, because I certainly want to share with you that the stock has been acting well. I'm not sure. Oh, here we are. So BRK, it's that slash that gets me every time. Berkshire Hathaway, you can see it's been in a super nice uptrend here, trending higher going into earnings, and that is another name that will be very closely watched. Last up here is GOLD. A lot of people on the lookout here with gold. I understand there's been disruptions with weather related that is holding back the earnings for some of these gold stocks, but certainly it will be closely watched. And that's it for this week, everyone. I hope you have a fantastic weekend. And as usual, if you like what you've seen, hit that like button below. And again, I would love to hear any of your questions you might have. I'd be happy to elaborate further going into next week, and any comments are appreciated as well. Have a great weekend. See you next Friday.